Hi everyone! At the close of the American session yesterday, most assets were rather volatile. At first, some instruments jumped while others dropped sharply. However, later on, the situation changed dramatically. Stocks eventually lost momentum following Powell's speech. In the Asian session today, stock markets are trading in the red zone. As widely expected, the Fed raised the key rate by 75 basis points for the fourth consecutive time. This hardly came as a surprise to investors who priced in such an increase a long time ago. Those traders who were looking for dovish hints somewhat found them in the FOMC statement. In determining the pace of future increases in the target range, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation and economic and financial developments, the statement noted. These rather vague comments became the catalyst for a sharp rise in shares. The US dollar went down instantly. However, a rally in the equity market turned out to be short-lived. At the press conference, Jerome Powell pointed out that the economic prospects are still rather dim and the cash rate may even be higher. It's very premature to be thinking about pausing, he said. So the Fed will continue to hike rates until the job is done. The tone of his speech was more hawkish. He clearly stated that the Fed's top priority is to push inflation to the 2% target. For this reason, the regulator is likely to stick to aggressive tightening. The greenback had been hovering in the sideways channel for some time following Powell's speech. However, shortly after it rose sharply. Before climbing today to 112.60, it was trading deep in the red corridor a few hours earlier. The lowest level was located at 110.50 yesterday. As for its high, it remains to be seen. On Thursday morning, the US dollar was still trading in the upward channel of 111.82, 112.56. Those traders who were betting on a softer stance had to face the brutal truth. Jerome Powell dispelled hopes for such a scenario. As a result, stocks fell while US Treasuries rebounded. The US dollar also jumped. Interestingly, the yen did not react sharply to these changes. Usually, a strong increase in the US dollar and the US government bond yield pushed the yen down. However, the dollar-yen pair was trading steadily at 148.13 in the Asian session. Perhaps the reason for such a strange reaction was another intervention by the Bank of Japan. Today, trading flows in Japan are closed on the occasion of Culture Day. The pair is moving in the downward range between the support level of 147.07 and the resistance level of 148.17. The outlook for the Japanese currency remains bearish. The Aussie is now facing bearish pressure as the RBA has shifted to a softer stance. It slid down to 0.6313 in the Asian session due to the rapid growth of the greenback. Apart from that, predictions that China may ease its zero-coronavirus policy also turned out to be wrong. Chinese authorities locked down a district in Shenzhou city, which is home to the world's largest iPhone factory. This is why the Australian-American dollar pair is fluctuating today in the bearish price corridor of 0.6308, 0.6373. That's all for now. Subscribe to our channel and keep close tabs on market developments. See you!